All right. So listen, guys, I'm going to get right into it for you guys. If you guys have any questions, I am going to leave. Hey, shout out South Cobb, it's lit. But listen, I am going to leave the chat box open. Please be respectful. If you do have any questions, go ahead and drop them in the chat box, and I will be checking it periodically throughout the call. If I can't get to anything, then we can touch base offline. Again, I did drop my Instagram in the chat for you guys. So let's get to it, right? So listen. The first thing, right now, again, all of you guys are in this business, or you're, potentially going to join this business because you want to learn how to trade. But understand that trading is so much more, right, than just the analysis, than the technical aspect, right? The first thing that you need to understand when it comes to trading is your mindset. Because let me tell you guys, if you could get the skill all day, if you don't have the right mindset when it comes to trading, and I say this humbly, you will not profit. Guys, I've learned this the hard way. There's been successful traders that have learned this the hard way. You have to get that mindset together when it comes to trading. So the first step when trading is to understand that this is not a sprint, it's a marathon, and you have to trust the process. A lot of people, want to learn how to trade and how to want to learn about Forex because they think that they're going to get rich overnight. And this is not a get rich overnight type of skill that you're going to learn, right? The goal is to get rich, yes, but it's not going to happen overnight. It's not going to happen the next week, right? You're going to have to put in the time in order to start to see that money grow. And, understand that trading is going to be a 3 to 6 month commitment because this is something new, right? This is a new skill that you're learning that you have to start to program your mind to start recognizing in the markets. So understand that this is a marathon. And one thing that I cannot stress enough, guys, is, all of you guys, we're here to make money, right? Which is cool. But we have to be trading something, for something bigger than money, right? You have to understand what your why is. Why are you doing this? Why are you learning this skill set? How is this going to help you, your family, your future family, right? Whatever you have going on, how is this going to help you? And keep that in the back of your mind as you go through this process. But understand, guys, right? Compounding and the power of compounding. Compounding is going to be your friend. And you're going to hear a lot of times, whether it be in the Discord chats, right, to compound your account, follow your plans, right? And all that means is that, instead of trying to flip your account in a day, right? Say you have $100. Some people are like, oh, yeah, I want to make $100 within the same day, right? That's super risky. We don't want to do that. So you want to compound your account. And what that means is you're going to start. Let's say we all start with $100 in our trading account. That's what I recommend for you to get started. If you are new, just have $100 in your trading account. And let's say our goal is to earn $5 a day, right? That's our goal. Now, that may not seem like it's a lot of money. Some of you guys may say, I'm paying $175. What am I making $5 a day for? But hear me out, right? $5 a day grows, right? It may not seem like a lot, but you're literally getting $5 from pressing some buttons on your phone from an app, right? Like, think about it this way. And if you make $5 a day, right, for 5 days a week, Monday through Friday, you've made $25 in 1 week. If you do this for a month, right, you've just grew your account by 100%. You started off with $100, and after 4 weeks, you now have $200 in your account just from getting $5 a day, right? You guys are following me. So listen, let's say by month 2, you decide, hey, I want to, leverage a little bit more because now I have more money in my account balance. And so now you double it, right? So now instead of getting $5 a day, you're getting $10 a day for 5 days a week. By the end of that second month, guys, your account has grown to $400. So just 30 days ago, right, or 60 days ago, you had $100. And now over 2 months, you have $400 just from slowly growing your account, guys. This is the power of compounding. There's so many different compounding calculators, plans that you could follow depending on your goals and where you're starting. But definitely seek a compounding plan. That way you can have some structure and have you know what you're in this markets for. So then listen, when it comes to trading, right, our goal is consistency over profits, right? You may have a day where you make, you may hit the jackpot, you may make some money a day, right? And then the rest of the week, you don't make any money, right? What we're aiming for is consistency. We want consistent wins, consistent profits, whether they are small. We want that consistency over a long time. And understand that this is going to be confusing, right? Trust me when I tell you guys, I understand where a lot of you are right now, where, you're new to this business. You're probably a day in, a couple of weeks in, and it's a lot of information. It's a lot going on. You're throwing in the chat. You have this academy. You have this training website. You have all these videos. I know it's a lot. but I promise you it gets easier over time. And what I found that helps is to create a schedule, get organized, and break things down, right? Give yourself goals. If you want to finish the academy within your first 2 days, right? Knock that out, right? Schedule an hour a day for go live and just start to pace yourself that way, right? You can start to develop that muscle memory. It starts to make a lot more sense the more you see it, right? You may hear a lot of different things and you may say, hey, you know, a week ago when I heard this term, it didn't make sense. But because I've been tuned in, I've been, you know, sticking to my plan, I've been following these certain educators. Now I'm starting to understand what everybody's talking about. Now I'm able to just look at a chart and just see what the market is doing because you develop that muscle memory. So that's super important, guys. And you want to have proper habits, right? It takes 21 days to develop and build a habit. So if you're new in this business and you only dedicate an hour a week to trying to learn how to trade, understand you are not going to learn how to trade. And I'm going to keep it real with y'all, right? It takes 21 days to develop a habit. So if you're used to getting on Netflix, if you're used to being on the phone talking to your boo, if you're used to getting on Instagram, making TikToks, right? None of that is income producing. So you're going to have to sacrifice certain things that are not generating you income so that you can replace that with an income producing activity, like learning how to learn the skill, because this is going to make you money. So ask yourself, do I want to make money? Do I want to learn this? Do I want to change my situation? Okay, bet. How much time am I going to dedicate a day, right? So that I can accomplish that goal, so that by the next 3 months, I'm generating this amount of income because I've put in the time and I've studied and I've stayed consistent. And now you've seen those results. So in order to do that, right, you have to have emotional control. You're going to have emotional control, emotional intelligence, right? You're going to have a trading plan, like I talked about, understanding how many pips or what is your profit goal? Are you trying to grow your account by 15% a day? Are you aiming to get 20 or 50 pips a day, right? What is your goal? And stick to that. Journal and write down what trades you're taking for that day. How do you feel before, during, and after you put that trade in? And I understand, guys, it seems like it's a lot. Like, yo, this is doing the most, but this is how you're going to get better. Because if you notice, like, let's say for a week, if you're tracking your trades and you notice during that week, like, listen, I know I lost every trade that hit this week. Why? And you notice that as you're tracking your emotions, you were emotional, you were angry, you were scared, right? That's going to be something that you can use to learn from. Okay, every time I'm scared and I place a trade, I lose money. That's something that you can pick up on and do better for the next time. And then using proper risk management, which I'll go over later on in this call. But the third thing, right, is setting those goals. So how I like to explain to people, right, again, people think they're going to get rich overnight. That's not the case. We've already established that. But look at what your goals are with trading, right? What are you trying to accomplish? If you want to supplement your income, right? How much do you make a year? How much would you have to make a month or a week or a day to supplement your income? And are you willing to start your account with a balance that can accomplish that daily trading goal? If you want to make $250 a day, but you only have 200 in your account, that is not a realistic goal, right? You have to have money in your account to be able to make $250 a day, to make $5,000 a month, to make $60,000 a year, right? So you gotta really plan this out so that way you know, okay, this is what I'm shooting towards, right? And break it down and work backwards. So the next step, right, is the trader psychology. Understand that you are fully accountable for your own success and failure. I see a lot of times people will come in the chat, and they'll go, oh, well, I took this trade from the group that you guys told me to take, and it hit my stop loss, and I blew my whole account. This is your fault. You shouldn't have told me to take this trade. I'm gonna blame you and you. Like, listen, we all have a plan. But you got to hold yourself accountable. Nobody is telling you when to place trades, what to place, what lot size to place, how many positions to place. You ultimately choose that. So if you lose money, and if you blow, you're going to lose money in trading. Let's just get that out there, right? Trading involves risk. Risk involves loss. You're going to win some. You're going to lose some. But if you blow your entire account and lose all your money, that is nobody's fault but your own. And I say that humbly because you ultimately know that you're supposed to use proper risk management. You know that if you have $100 in your account, don't take a US 30 trade because you don't have enough money, right? You should know these things, and the signals will specify trade at your own risk. So take accountability for your losses. and educate yourself, right? Ultimately, this is a business, guys, that you have control over. You get to decide when you want to learn and how you want to learn, how much you study, how frequently you study, who you study, right? This is all on you. You have an entire family to help and support you, but ultimately you are responsible for how well you do in this business. You are responsible for how much money you earn based off of the work that you put in. If you do not dedicate time, if you do not tap into these type of sessions and these calls and these late night live trading with C4 and Curry, guys, you cannot expect to learn the skill set, right? If you don't go through the academy and if you don't go to Go Live, understand watching the 100 and 200 and 300 series in the academy is not enough. That is literally the basics. That's literally going to get you the terminology and kind of like it's putting it in your mind. But Go Live is how you're going to actually apply what you're learning in a real life scenario. You're able to see how the markets move live and have somebody explain this to you guys. So I'll go over that later, but do the work and it's going to pay off and you're going to get your money's worth from this and you will see return and profit. And the ego is the enemy, guys. Listen, within your first 90 days, right, you should be literally taking all of your trades on your demo account, right? This is fake money that you can literally just practice, place trades, mark up your charts, you know, practice with lot sizes. That way you can understand, okay, if I have $100 and I put a 0.1, I lose my account. Now I can't, now you know not to do that today. And it'll put things in perspective. But, you know, I do recommend that everybody start with their live account in their first week. And I'm gonna tell you why, because we have amazing products. We have educators going on Go Live sessions. And a lot of times in our Discord chat, we are providing signals from either Go Live or these products. So if we drop a signal for you guys to take, put that into your live account because it's vetted from an actual reliable source. And so that way, as you're learning, you can still start to see some profits as you're going through that process. But only take the signals provided from the products, Go Live, or the Discord MMO chat in your live account. Do not take your own analysis. Don't take your friend's signals. Don't take a Telegram signal in your live account. And if you do so, you're doing it at your own risk. Period. And one thing I want to touch on that I actually noticed, you know, just this week that a lot of traders don't realize, right? When you first place a trade, guys, your trade is going to be negative, right? It's going to be red. It may go blue and then go red. And a lot of times as a new trader, that's going to psych you out, right? You're going to get nervous. You're going to be like, oh my gosh, I'm losing the trade. Let me close out, right? Again, understanding and controlling those emotions. When you trade in your demo account, you don't really get to see those full emotions because it's not your money. But when you risking your real money, those emotions kick in full force. And I promise you guys, you'll know it once you actually get into it. But those emotions will kick in. And you will get scared and you will have FOMO, which is fear of missing out. If you see everybody profiting in a trade and you didn't get in, now you want to get in because everybody's winning, but understand you won't win because you got in late, right? So master those emotions, don't have FOMO, and just let the trade play out, guys. Let me check the chat box real quick because I know we got some, oh, okay. Thank you guys. Listen, drop some fire or some ones in chat if y'all with me right now, and if y'all are getting some good information so far. And I didn't even get to the good stuff yet, but this trading mindset part is so important, and you're gonna hear this all the time when it comes to trading because, guys, this will make or break you as a trader. I promise you it will. All right, good. So y'all are tapped in. That's good. Okay, so look. Now I want to walk through MetaTrader 4 or MT4 with you guys, right? If you do not have MetaTrader 4 downloaded on your phone, please do that right now because this is literally the app that we use to trade and make money. If you don't have MetaTrader 4, you're not a trader because you can't, this is what we use, this is our platform. So make sure that you guys have that downloaded. I'm going to walk through a few of the screens with you guys. That way you know what everything means. When you actually log on to the app, right? So this is what we use to trade. When you first log on to MetaTrader 4, right, you're going to be placed to the quote screen. I have this video here to kind of walk you through it, right? So this is going to be the quote screen, right? Okay, video. So this is going to be where you actually have all of your pairs to trade with, okay? So anytime you guys, okay, hold on. Oh, this jumped my whole PowerPoint. Okay. Hold on, guys. Technical difficulties here. Just trying to jump the gun. Okay, listen, anytime you guys are ready to place a trade, right, you're going to have to go to the quote screen. And the quote screen is going to be where you actually select which pair you are going to trade. You can't pick a pair unless you actually go to that screen. The next screen is going to be the chart. And this is going to be where you actually see the Forex pairs moving live, right? So this is where you see the market going up and down. You see what the market is doing, where price is currently going to be at. And this is where you can mark up your charts and visually get an idea of, okay, is it going up or down, right? That's going to be on your chart screen. The next screen in the middle is going to be your trades. This is where you see what trade you have open, what your current balance is, what your profit or your current loss is, what your equity is, which is going to be your balance plus or minus whatever you're profiting or losing at that time, and your margin percent, which is letting you know, are you about to blow your account? So guys, write this down. If your margin percent is below 100, right? This is on your trade screen. This is going to be the last piece at the top. If your margin percent is at or below 100, you are about to blow your account. And what that means is you are going to lose money. You're going to lose your whole balance because you are risking more than what your account can hold. So what will happen when you see that, your whole screen will turn red, right? It will turn red, and that's danger zone, that you're about to lose some money. And it's going to force you out the trade. It's going to close you out negative, and it's going to take basically half of your account. So guys, be very mindful. Look at that margin percentage. It's going to start off in the thousands if you're using proper risk management, but once you see it at 100 or getting to that point, start closing out some of your trades, guys. It's so important. And then the next screen is going to be your history. This is going to show you, what your actual total profits and losses are for that day, for that week, for that month, or you can customize the time frame. So if you want to look back and update your trading plan and say, okay, well, how much did I make last Thursday and Friday? You could filter it between certain dates to see how much, what you lost, what you won, which trade specifically you were able to profit or lose on. And then the very last screen is your settings tab. So this is where you actually connect your accounts, right? You connect your broker account to the trading app. And guys, if you do not have your broker account set up, please go to our training website, mastertheacademy.com. Go through that training website to show you the steps on setting up your broker account. You need to have a broker account in order to place a trade, because with MetaTrader 4, it does not come with money on the app. It's a free app. So if you want to actually put money onto this app to trade with and take money off of the app when you win and you profit, you have to do so through your broker. So to connect your broker, you just do new account, you search which broker you're doing, you connect your live or your demo account, and then that's how you connect your money to your trading platform. You can also change the colors and customize your chart by just doing charts. You can change the background, you can take away the grid lines, you can do a lot. You can change the colors of the candles through the settings screen. Now, when you want to add a pair, let's say, for instance, you get a signal or a trade ID, or you hear somebody talking about this particular pair that's fancy and moves fast, and you want to add that on your screen, and you notice that it's not showing on your quotes list, right? If it's not on your quotes page, right? What you are going to want to, okay, we're not doing this today, PowerPoint. Okay. What you want to do is actually go to the top of the screen, click the plus button, and find the pair, right? You can bring the pair down, search for it. Once you find it in this list, you're going to hit the green plus to the left. It's going to add it to the bottom of your quote screen. You can back out of all of the screen. It's going to add to the bottom of your quote screen, and now you can choose that pair whenever you're ready to trade it. You're going to find a variety of different groups of things that you can trade, right? You're going to have your Forex pairs, which is going to be like your USD and Euro, your Great British Pound and Japanese Yen, right? Those are your Forex crosses. And you're going to start hearing certain code words and nicknames for these pairs too, because nobody's going to say GBP, USD. That's too many letters. I stutter, so I always mess it up. So, you're going to hear people say like GU, right? And that's going to, refer to GBP, USD, taking the first letter of each currency pair and just shorten it, GU, NU, UC, or UCAD, right? You're going to hear these nicknames, UJ, oil, gold, AC, right? So as you kind of get familiar with these pairs, it's going to make a lot more sense to you. A lot of them only have, USD, the only U out of the pair. So U is USD. There really isn't any duplicates that would confuse you that much. So it's easy to kind of pick up on that. You have metals, golds, and silvers. You have cryptocurrencies like Bitcoin, Ripple, Ethereum. You have energy like U.S. oil, natural gas. You have indices like US 30, SPX. You have stocks that you can trade depending on your broker. You can trade Tesla, Nike, Apple. There's so many different options that you guys have to trade, but understand they all move very different. Some are more volatile than others, so be very careful with picking these pairs, especially with low account balances, because some pairs you cannot trade with under a certain amount in your account. The next important thing to know is about the spread. So if you're looking at your quote screen and you know you are at the advanced screen is going to show you the spread, and it's going to show you all some other details, right? So on this particular screen where you see the spread, think of the spread as a tax on the trade. Really all it is the difference between your buying and your asking price, right? So what are people currently buying at? What are people asking at as far as the sell? Is taking the difference of that. But I always like to just reference it to tax, because you know you may have low tax on the trade or you may have high tax on the trade. So when you have a low spread, you know there's just a little small tax taken out of your trade. So it may be, you know, $1 or a couple cents that's deducted off of your total trading balance, which is okay. You know, the broker could have 50 cents while you make $5. It's not that big of a deal. But if you are trading and it's a high spread, right? And usually you'll have high spreads when the market opens. The market every single day, Monday through Friday, is going to close at 5:05 p.m. Eastern Standard Time, right? Closes for an hour. Friday closes indefinitely until Sunday, but Monday through Thursday, guys, the market is going to close at 5:05 p.m. for most pairs, and then reopen up again at 6:06 or 6:05 p.m. Eastern Standard Time. So really, between 5 and 6 o'clock p.m. Eastern Time is a horrible time to trade, because the markets are closed, no pairs are moving, and when the market reopens at 6, the spreads are very, very, very high. So if you take a trade at 6:05 and the market's just open, you're going to be essentially paying more tax on that trade. You're going to not be profiting as much as you could if you would wait another hour for the markets to correct itself and the spreads to come down. How do you know what is considered a good and low spread? It really just depends on your broker and the trade, but theoretically speaking, any spread that's more than 100 is going to be a high spread, and you want to be mindful of that when trading. If you're wondering what these numbers are here, this low and high, right? This is the low of the day and the high of the day. So we know that the market's going to move up and it's going to move down, right? This is going to capture the highest point that it made that day and the lowest point that it made that day. Depending on your trading strategy, this may help you or it may be completely useless. Again, depending on your strategy. But this is what this is talking about on the screen. So how do you actually place a trade? This is $1 million question, because I know a lot of you guys, right? Again, it's going to take time to learn how to trade, but you could be copying and pasting that, you know, these signals. That way you can start profiting as soon as you get started. So the first step is that you're going to want to identify the pair, right? The second step is making sure that you have a proper lot size, and you want to use a 0.01 per $100. Now, there are 3 different lot sizes that you guys will have, and you will learn this as you go through the academy, but you have your micro, your mini, and your standard lots, guys. So a 0.01, this is the smallest lot size you can use. A 0.01 is equivalent to 10 cents in the market. So for every movement or pip the market moves, right? Every position the market moves, that's 10 cents per movement, right? Or you can use a 0.1, which is $1, and that's $1 per movement. Or you can use a 1.0, which is a standard, and that's $10 per movement. Now understand this, and I cannot stress this enough, guys, with proper risk management. If you do not have really $5,000 to $10,000 in your trade account, do not place a standard, do not place a 1.0, because your account will be gone in a matter of seconds, and it will humble you and break your heart, and it'll make you rethink your whole entire life. So please be very careful when it comes to choosing your right lot size. So if you can look on this screen right here, right, where you see in the middle says 0.05 plus 0.01, this is how you control your lot size. So for every $100 in your account, you want to be using a 0.01 total. That means having 1 trade open for a 0.01, not 6 trades, but just 1 trade. And that is proper risk management. right? So that way, if you lose money, you're not losing your whole account. You're only risking very few dollars, and you still have money left over to trade. You can add to your lot size by these on the right with the plus signs, and you can take away from your lot size by making it smaller by these negatives on the left. In this screen, you'll be able to copy and paste the stop loss and take profit, and then enter buy or sell. So I'm going to actually go over these in more detail with you guys, right? So, see, we have a question. Let me see something. Is this a 0.01 when the ratio is only 1-to-1? I don't understand your question. Do you mean like what your as far as leveraging goes? Because we recommend like using a 1 to 500 leverage, and so that if you're using that, really a 0.01 should be used on your account balance, period, regardless of what the ratio is. You want to be able to use a 0.01 because that's going to be proper risk management. So I'm going to go over everything in the last screen that just showed you guys in more detail. So when you first are finding the pair, I kind of went over this already, right? Go to the quote screen, choose what you want. So this is an example of a signal, right? You're going to see something like this either be sent to the Discord or on any of the products or any of the apps. It's going to be something like this, right? It's going to tell you to buy or sell a pair at either market or putting a limit or a stop in the trade. It's going to sometimes give you your entry, but it should always give you a stop loss and take profit, right? And I'll go over that in a second. But first step is finding the pair identified in the signal. Once you find that pair, you click on it and you can I always recommend looking at the chart first. That's my recommendation. Look at the chart first. That way you can see what it's doing. You can mark up your zones and then enter the trade, or you can just enter the trade automatically. You're doing that at your own risk. Once you find the pair, right, you want to be able to identify if it's a buy or a sell. So when you have something that is saying to buy a certain trend, you know, at either market or whatever, right? A buy is when the market is moving in an uptrend, right? It's moving in an upwards direction. You want to enter at some low point, right? Or in the middle of, you know, its move, and you want to get in this trade because you expect the market to go in an upwards motion, right? So you literally profit when the market is going up. You may hear it referred to as bullish, or somebody saying I'm taking a long position, right? They're talking about buying the market. So with a buy, your stop loss, right? And your stop loss is going to be your risk management. This is saying if I want this market to go up, and for some reason, because the market is going to do whatever it wants, if it goes down, it's going to hit my stop loss and take me out the trade. I'm going to lose what I am willing to risk, but I will still have money left over in my account to fight and trade again, right? So you want to have a stop loss, and you want to make sure that it's below your entry if you're buying. Your take profit, which is where the market where the trade will take you out of, you'll be taken out of the trade in profit, meaning with money, at a point above your entry. Again, because we want it to go up, so your take profit is going to be above your entry. The opposite applies when you're selling this market. When you're selling it, right, you want it to go down. It's a downtrend or a bearish market, right? You may hear bullish or bearish. Bullish is going up and buying. Bearish is going down and selling. And you want your stop loss to be above your entry, right? Because again, think of your entry here. Your stop loss is here. So if we want it to go down, if the trade goes up, it's going to hit our stop loss, take us out the trade. But if price stays below our entry and keeps going down, that's where you have your take profit below your entry point. I hope this is making sense to you guys, because this is really, really important, knowing when we're buying, when we're selling. Is it going to go up in the trader app, the signal? I don't understand the question, but when you get the signal is basically somebody's analyzing this market for you already, right? They've looked at the market, they've done analysis, they know when it gets to this certain point, the market is either going to buy and go up or sell and go down. So they're giving you this trade idea, telling you, hey, enter the market here because it's going to go in this direction and you want to secure your money at this point. So that's where you're copying and pasting. So if you see a trade, right, saying to buy it at market execution, all that means, guys, is that you're going to buy it at that current price. And so you'll see, like in the last example where it gave you the entry point, right? It tells you to sell at this number or buy at market execution. When you see a trade either by itself just saying sell a pair or specified at market or at market execution, you're going to get in that trade right at that moment. Or if you, like I recommended, marking up your points around this entry. Because think about this, guys. If you see a trade or signal being called, right, and it's telling you, hey, whoever called this trade, they entered the market at this area. If you take this trade 2 hours later and it's already right by your first take profit, when you get in, you're not going to win any money because you got a late entry. So when you get to your trading app, literally, guys, you can click on the chart, you can add an object, and you can add a horizontal line, right? And if you select that horizontal line, you're able to modify the points. So you can literally paste like these numbers right here, put 107.800 where that line is. And it's going to put a line where your entry is, right? You can do that for your stop loss and your take profit. That way you're visually able to see these points on the market, you know, on your chart. So if this trade was called and you look at this, you know, signal 2 hours later, and the candle is way far away from your entry point, you know, don't take this trade because you're not going to get any profit off of that. But if it's still around your entry point, you can still hop in that trade and secure some profits, right? So that's super important. Mark up your charts. Don't just be a copy paste or signal taker, but take the time. It's literally 5 seconds to add some lines so you can visually see. And that's going to help you with that muscle memory of looking at these charts, knowing what it's doing, understanding, okay, if my take profit is here, why did they put that right there? What is up in this area, right? How does that look like in the market? That's going to help you condition your mind. So another thing that you may notice is called limit and stop orders or pending orders, right? Pending orders are literally trades that are going to be put in now, but it's going to activate later. So think about it this way. You can set up a pending order at 8 o'clock. It may not activate until a couple hours or maybe the next day, right? But you don't have to put yourself in the trade. It'll activate once it hits that defined zone that you specified. So there's 2 types of pending orders. And I like to think about it in 2 very, very simple ways, right? When you have a stop, whether it be a buy stop or a sell stop, you are expecting a continuation in that same direction. So if we have a buy stop, right, all this means is that price may be currently buying, right? But we may not know if it's going to keep buying up or if it's going to, you know, do a fake out and go down. So we're saying, hey, if price can touch this particular line that I'm specifying, right? If price can come to this zone, I expect it to keep going up in the same direction. So once the candle hits your entry point, right, hits that defined price, it's going to automatically put you in that trade, and you're going to be in for a buy, and you're going to be continuing that direction. Same thing for a sell. So you're looking at it, you're finding, okay, this is my entry point, but you expect it to continue in the same direction it's already in. When you have limits, whether it be a buy or a sell limit, you expect price to go in the opposite direction, right? That's going to be your reversal. So for instance, price can be selling, it can be going down, and we know based off of our, you know, analysis and confirmations that once that price and that candle hits a specified zone, it's going to reverse and it's going to buy. So price may be currently selling, it's going to hit your entry point and put you in a buy for you can catch the reversal back up. Same thing with the sell limit, guys. So with the stops, it's a continuation, and with your limits, it's a reversal. Most signals that are sent to you guys will specify if it is a pending order. It'll say buy limit, buy stop, sell stop. If you don't see that in the signal, it usually 99% of the time is going to be entered at market execution. So keep that in mind. I know people are, you know, they have questions about how do I know when to do what? It's going to tell you in the trade. And you'll know from there. So Megan, I'm actually recording this call. So I will drop it in the Discord in our recorded call section. Just give me some time to get it, you know, uploaded, but I will have this recorded for you guys to review later and take more notes or show anybody on your team. And we also do these calls 3 times a week, Monday, Wednesdays, and Fridays. It'll be myself, Curry, or Steve Jobless that are doing these calls for you guys that you can get this information. And it's literally the same PowerPoint. It's just different people explaining things differently. So we're doing this for you guys so that you can understand what's going on when you first get started. So I talked about your stop loss and take profit already, but guys, I know I've been saying this a lot, but I really can't stress this enough because I personally have been humbled, okay? And I do not want you guys to take any losses. So you want to always have a stop loss on your trade. Always, always, always. I don't care if somebody says, well, the banks can see your stop loss. And I don't care. Put a stop loss, because this is going to help you guys mitigate your losses, right? At the end of the day, the markets move how they want to move. We do not control the markets. We are just playing in this market. We don't know what it's going to do, right? All of our analysis can say it's going in one direction, and then Trump may get on and speak or say a tweet, and it freaks the markets out and it goes opposite. You want to be able to secure your bag at all times. So have a stop loss and understand that you want to be risking 2 to 3% of your account. So if you have $100 in your account, 2% of that is $2. You want to risk $2, right? So if you're in a trade and you want to risk 2% of your account, and you're trading with the 0.01 because you're using proper risk management, your stop loss is going to be between 20 and 30 pips, which means you're going to be losing $2 to $3, which is not bad. You got $98 to still play with, right? If you take a $2 loss, you can always get back in. You could take 5 $2 losses and get back in and still make that back, right? So have a stop loss. Don't be greedy. Have a stop loss, have a stop loss, have a stop loss. It's so important, guys. And Lord, I learned this the hard way. I've lost so much money because I thought I knew more than the markets, and it humbles you guys. I don't want you taking these losses. And have a take profit point, right? A take profit is literally hands-free profit. When you put your take profit point in, it's going to hit that, take you out the trade, and you're going to see blue. You're going to see more money in your account than you had, right? What is better to literally have pillow profits? You go to sleep, you put your stop loss and you take profit in, you wake up and you have money, and you literally made that in your sleep. You can enter a trade without a stop loss and take profit. It's called enter it, blind. You go all in. I would not recommend that until you really know what you're doing. Because if you're not watching it, it can go any kind of way and you would have missed your bag. So have your take profit. You may see trades that have multiple take profits, guys. I'm going to explain this. If you see a trade with like TP1, TP2, TP3, that's just giving you 3 different potential profit areas, right? Those 3 areas are not guaranteed, right? It could hit stop loss. It could hit take profit 1 and then reverse, right? They're not guaranteed. So as a new trader, guys, take the first take profit point. Take TP1 and do 1 trade and put that take profit in there. If you wanted to, at your own risk, right, you can do 1 trade, but enter the take profit 2. Ultimately, you get to decide which take profit point you want to use in your trade if you're entering 1 trade, but just don't go for take profit 3 because it honestly may never get there, and now you just enter the trade and you didn't make any money. Additionally, if you have the capital to hold to hold multiple trades, if you have a trade that has 3 take profits, you could do 3 different entries, right? You can enter that trade 3 different times and you can do a different stop loss per trade, right? But understand that all of those add up. So if you have 3 different trades open at a 0.01, you are risking total a 0.03, which is 30 cents per pip. Right? If you have 3 trades open at a 0.1, you're risking $3 total in your account. So if that's more than you want to risk, don't do multiple entries. Just do 1 entry and you can, use one of the 3 stop losses. Take profits as your target. I know that can confuse a lot of people who get started. So twin trading would be what I just explained, right? Having multiple trades open at one time. So if you see a signal, you can press, buy, or, plus you can get into that trade 3 different times. That's twin trading, having multiple of the same trade open. But again, guys, be very careful of your lot size, because if all 3 of those trades go negative, you just increase your loss when you do that. So calculating pips, this is also something that's important to know, because this is how you determine how much you're actually going to win and how much you're actually going to lose. So this chart, this slide's kind of confusing, but I'm going to just really break it down simple for you guys, right? We already talked about a 0.01 for a $100 account, right? So if you look right here, this is kind of going to give you a breakdown of what you're going to win or lose, right? So using a 0.01, 10 pips, you're going to risk or lose, lose or gain $1, right? 20 pips is $2, 30 pips is $3, so on and so on. All you're doing is taking 10 cents times your pips. So remember that 0.01 equals 10 cents, right? Which is 0.1 in the calculator. A 0.1 is equal to $1, which is $1 in the calculator, and a 1.0 equals $10, which is $10 in your calculator. That's important. So if you are trying to figure out, okay, well, how much am I going to lose? Take 10 cents that you're risking times 50 pips, and that's going to give you $5, right? Or you can take, 0.05, which is 50 cents, right? Or 0.5 times 10, that's going to give you $5. That's how you determine how much you're going to gain or lose. Now, you can do the same thing in reverse when trying to figure out if you're in an active trade right now and you're trying to determine, okay, well, how many pips am I up currently? So you can keep track of that, right? So if you guys take your, I'm gonna give you a little math formula. Let's write this down. To calculate your pips while you're in the trade, right? You're gonna take your total profit or loss, whatever number that's, your balance plus or minus dollar-wise that you are in your open trade, divided by your lot size in dollars. So for instance, if we're in a trade, right, and we are, let's say we are negative $10, right, and we have a 0.01 lot size, which is 10 cents, and we want to know, okay, I'm down $10, how many pips is that? If you take $10 and divide it by 0.1, which is 10 cents, that's going to give you 100. So that means that you are currently down 100 pips. That may be more than what you're willing to risk, right? You want to risk 20 pips, 2% of your account. So if you've down 100 pips on a $100 account, now your balance is $90. So you've risked more than probably what you wanted to risk on that account. Same thing for if you're in profit. If you are in profit $5 and you want to know how many pips that is, $5 divided by 10 cents is going to give you 50. So you are 50 pips in profit. So that's how I kind of use it to determine, okay, am I at my goal or not? But you can also determine that by certain pairs. Now, I'm not going to go over every pair because every pair has different, decimals after the, numbers after the decimal place. Like certain Forex pairs may have 5 digits after the decimal, 4, 3, 2, 1. Every pair is different. But let's just take, GU, for instance, right? If our entry is 1.23300 and our stop loss is 1.23600, right? You want to take the third number after the decimal place, right? So you have 3 and 6 and subtract the difference, right? So the difference is 3 and times 10, right? So it's going to be 3 is the difference, right? That's 30 pips. So if you're trying to figure out, okay, well, if my entry is here, my stop loss is here, how many pips is that? 6 minus 3 is 3. 3 is equivalent to 30, right? So that's going to be 30 pips that your stop loss is. And if we go back to this formula here, 30 pips divided by our lot size, which is 10 cents, is going to be $3 risk. So if this particular trade hits our stop loss, we're going to risk or lose $3, guys. So drop some ones in the chat if this is making sense to you guys. If you're actually understanding that, I want to make sure that you guys are still with me here. Let me see some ones if you make sense for that. Now I'll repeat the formula again. Okay, awesome. So listen, so again, for you guys, right, if you want to know the formula to calculate your pips, right? To calculate your pips, you're going to take your total profit or loss, right? If you go to your trade screen, you have the trade on the right side, you're going to either be red or blue, a certain number. Take that number, right? Divide it by your total lot size in dollars. So that means if you're using a 0.01, you want to divide it by 10 cents, which is 0.1. If you're using a 0.1, which is equivalent to $1, you want to divide that by 1 for $1. And if you're using a 1.0, you want to divide that by 10 because that's $10, right? So, and again, this is all in the academy, guys. I'm kind of flying by this, but understand what these equivalents are, right? 0.01 is 10 cents. 0.1 is $1 and a 1.0 is $10. That's what you're going to use as your denominator, the number at the bottom, right? Fractions, we get back in school here. And that's how you determine how many pips you are, right? In order to calculate how much you're going to be in profit or what you're risking, you're going to take how many pips you're looking for times your lot size in dollars, and that's going to give you what your total profit or loss is going to be for that trade, right? So that's 2 formulas that'll help you, if you don't understand how to look at the decimal places, how to determine, how to calculate that. So I'm almost done, guys. A few deadly habits that you want to avoid that, honestly, you're going to make these deadly habits because we're human. We're all human. We have emotions. We can't help it. But be mindful of this when you're trading because it's bad habits, okay? Over trading. Overtrading is placing too many trades in a day that your account cannot hold, right? Or just literally, I've seen some people may have 10 trades open, right? 10 different pairs, 10 different trades, 10 different lot sizes. That is overtrading. You are overdoing it for your account because you may be in profit, but if all those trades go negative, you are literally killing your account. Right? Again, you must have your daily goal. Stick to that goal. If you're trying to get 50 pips, 100 pips, 5%, once you hit that, stop trading because you've made your profit for the day, right? You've made your goal, plus or minus a couple dollars. Stop trading for the day because it literally will be the time where you've made your goal. You feeling good, but it's only 8 o'clock in the morning. You got the whole day left. And so you see all your friends trading, taking all these trades and making money. So now you want to get in and make some more money. And then you lose everything you just earned. Guys, this happens in real life. Don't let that be you because you will be sick. I promise you, you'll be sick. Don't overtrade, right? And if your trade hits your stop loss and you don't really know how to analyze the markets yet for yourself, do not re-enter. Let it hit your stop loss, take your little L, and go on about your day. Because as soon as you get back in, it hit your stop loss once and it keeps going opposite, you're going to lose more money and you're going to be sad. I don't want that for y'all. Don't over leverage. And I've been saying this throughout the entire call, guys. And that's using too high of a lot size for your account or placing too many trades that will increase the lot size total. So remember what I told you, right? With the multiple take profits. If you enter, 3 entries at a 0.01, you're really risking a 0.03. And that may be too much for your account, right? So be mindful of over leveraging. If you use a 0.1 on a $100 account size and your trade goes negative 20 pips, you've lost $20. So you have $8 left to trade. That's over leveraging. You're risking more than you want. If you have, and this is important, guys, if you have under $1,000 in your account, do not trade US 30, JER 30, NAS 100, or SPX, unless you are directly supervised. And even then, it's still risky. But these are called indices, and these pairs are highly, 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 highly volatile. You will make a lot of money, but you will lose a lot of money very, very quickly. Literally, that happened to me. I caught an L today off of NAS 100. Listen, I make it is what it is. You win some and you lose some. But, right, it moves fast, guys. Like literally you could put a trade in and within 5 minutes you could be up $50 or your account could be gone. So do not trade these pairs if you have under $1,000, especially if you do not know how to look at these markets by yourself and you don't know how to analyze trades, or you don't have guidance from a mentor who actually can direct you on how to properly trade these. Just don't do it. You'll thank me later. And then revenge trading. Revenge trading is taking a loss, right? You hit your stop loss or you over leverage and you lost more money than you wanted to lose. And now you're determined to make that back. You want to get back in the trade and make back what you lost plus some, because now you got to make back extra, right? You change your lot sizes because you want to, instead of using a 0.01, now use a 0.1 because now you're trying to make that money back quicker. Don't do it. Because now you're trading with emotions. You're not thinking rationally. You're not looking at confirmations. You're not checking your entry, right? And you're going to lose more money. Literally, guys, trust me when I tell you this. This is real. This is real life. I've seen it. I've experienced it. This can happen to you and it sucks. So, I can only say this to you guys. You're going to do it anyway because you're human and you're going to learn and you're going to be like, dang, Asia was right. She told me not to do this and I did it anyway. And it's okay. You're going to learn. Every L you take is a lesson, not a loss. Think about it that way, right? Every L you take, look back at why did I take this? Why did I take this L today? What was the lesson in this particular trade? Did I over leverage? Was I emotional? Did I just hop into this trade blind? Did I mark up my chart first to kind of just see where these points was? Did I take a signal from my cousin 2 houses down who don't really know how to trade for real? Why did I lose this trade? Right? And use that loss as a lesson so that for next time, you know what to do and what not to do. So I have one more thing I want to go over with you guys, and that's how to access Go Live in these products. Listen, so how long should you stay in a trade? So think about it this way, right? Your trade is going to do a few things. It's going to either hit your stop loss, hit your take profit point, or you're going to close out in profit. That's really it, right? So if you enter a trade and you use proper risk management, right, let the trade play out, guys. It may take a couple hours. It may take a couple days. You have to be patient when it comes to trading because certain pairs move really slow and certain pairs move really, really fast. So if you enter a trade and it hasn't hit your stop loss or your take profit, just leave it alone. Let it do its thing. It may consolidate and hang around an area for a couple hours. It may not move into a certain session. Like certain trades I placed this morning, it's been negative all day because it's going to move during London session because it's European pairs, right? So I'm not expecting a big move right now. So let it play out. Once you are in profit though, guys, once your screen is blue, you can close out and profit at any time. Remember, you're following a trading plan. So if you have a signal that's 60 pips in profit and your goal is 20 pips, once you get to 20 pips, close out and be done. Right? You can always close out and profit, secure your profits at all times. You can close out by taking partials. So if you're on your trade and you swipe to close out, right? Instead of hitting close with profit of whatever the number is, you can adjust the lot size. So only if you're using above a 0.01. Yeah, once it's blue, it's on you. But once let's say you're using a 0.02 for a trade, right? And it hits TP1 or it hits 20 pips in profit, right? You can literally hit close trade, but don't close the trade out yet and do minus 0.01, right? And it's going to say close out with whatever half of what your trade was. So that's securing partials. You're literally securing half of that open trade, and you're going to secure half, and then the rest is going to play out to TP whatever, right? So secure your money always, but let it hit your stop loss or your take profit or secure out and profit. Those are your three options. And you should always either have a big win and a small loss and a small win, or you're breaking even. But you should not have big losses, especially if you're using proper risk management. So the last thing, guys, I'm only gonna take up 3 minutes of your time, and then I'm gonna let y'all go and study and make this money. But I want you guys to understand how to get to Go Live, because Go Live is going to be your friend, guys. Go Live is where you literally are getting on trades with these educators who are doing this full time, and they're giving you the sauce. They're literally showing you how to make money, and you just copy. You're literally being a C student, and you're copying off the smart kid in class, and you're acing the test, bro. You're literally getting paid to copy somebody. This is the best thing ever. Like, this is lit. So get on these sessions. I highly recommend, if you're new, to get on Manny Quinones sessions. He is literally going over the harmonic scanner. All of you guys, no matter what package you have the harmonic scanner. Guys, let this investment be worth it. Use what we have to offer, because if you don't, you're going to look back and say, I've just wasted my money. Don't waste your money. Use this platform, because with the harmonic scanner, right, it's going to scan the market and give you signals. And if you plug into Manny sessions, he's going to give you live trades that you can copy and paste into your live account and make money. And then go back and study his live, study his recorded sessions and learn his strategies on how to use this, how to use the scanner. This is life-changing information. So let me go back. I'm going too fast. I'm excited. So once you're on im.center, right, this is your academy. You are going to go to the left-hand side and go to Go Live, right? This is how you're going to access all of the Go Live and educators that you have access to. There's a bunch of educators. I get it. I'm recommending Manny Quinones. That's it for right now, right? Manny Quinones for the harmonic scanner, or Abel Melendez for just basic Forex information, no products. Abel Melendez is great with just explaining the basics of Forex, what it is, support and resistance. He's the GOAT. Manny is your is going to get you paid with the harmonic scanner. So, utilize both of these educators. He's literally right here in his fly blazer, looking real sharp, right? You can click there, or if he's not showing right here, you can go all the way down to harmonics. He's literally one of the first ones. Go to harmonics, right? And you are going to find my man Manny, and you're going to click on his sessions, and you are going to get on his sessions and make money and learn, right? You have your learning and your earning sessions. Tap in, guys. So it's going to have his schedule when he goes live. He goes live Tuesday, Wednesdays, and Thursdays at 10 o'clock a.m. Eastern time, 9 Central, 7 Pacific time, international, I'm not sure, but 10 o'clock a.m. Eastern time, Tuesday through Thursday. And once it's 10 o'clock a.m., you're going to click play, watch his live sessions. You can ask him questions, and he has recorded videos for you to review, to study his strategies. Go to the favorite sessions, guys. Literally, I'm about to get you out of sauce, because I told you it's overwhelming. I'm giving you a plan to start. That way you're not overwhelmed and you make money. Manny Quinones, go to his favorite sessions and start where it says Scanner Strategy Series Intro. Scanner Strategy Series Intro, right? Watch that video. You can watch any of these, but that's a good place to start. Scanner Strategy Series Intro. That way you can understand the introduction to the harmonic scanner. And then as you understand the basics, you can watch different strategies. That way you can start to become really, really lit with trading. And you can master not master, but you can, become profitable using one skill, right? You literally don't want to come in and learn 17 different strategies. You're going to lose. Stick to one strategy, one educator, learn it, breathe it, live it, understand it, know the patterns, and you are going to be lit, guys. I promise you guys. So Manny Quinones, M-A-N-Y, let me not mess his man name up. Here it goes. Manny Quinones. This is my guy right here. Watch his sessions. And I'm going to show you guys how to access the harmonic scanner. So that's just the Go Live, right? Again, from your homepage, you just go to Go Live. Harmonics, click on my man, or you can click on him from right here. But from the front page of the Academy, if you go to strategies, right? So Go Live is here, strategies is right above it. Strategies is how you actually get to the product. So this is how you actually find the products to look at. Harmonics is the first one. You click on Harmonics, it's gonna pull up the chart, or you can go to harmonics.im and you're going to have the scanner. It looks like TradingView, which is like an online platform where you can mark up your charts, but this is it, guys. It looks super overwhelming. Listen, focus on these numbers to the right. This is gonna give you your entry point, your trade, your take profit, and your stop loss, right? If you look at these candles right here, and if these candles are at or like above or below your entry point, it's too late. Do not get in the trade. Okay, like this one right here may be valid, right? Because you see this candle is right at this second entry. You could get in this trade and take take profit points. This is actually a really good setup. I may take this, but it's right at this second entry, right? So if you get into this trade and you put in take profit 1 and this stop loss, we expect this candle to get to this point. It's going to close you out in profit. If you look over here, the trade at the top is going to be the most recent trade idea that they've called out, right? Boom, entry right there. That's lit, y'all. This is really lit. The rest of these are going to be other trade ideas that you will have. Some of these may have already played out already, but again, guys, get on his call. That way he can show you how to use the scanner. We have other apps like GoldCup and stuff like that. GoldCup is also lit. You have about 6 educators that are giving you these trade ideas. So tap into these resources, guys. These are literally here to help you make money. They're literally here for you. So that's all I have for you guys. I hope you guys learned something and really got some value from this. Okay, one more time. Okay, so listen, when you're on IM Center, guys, to get to the actual products, you go to strategies from im.center. Get on strategies. If you want to go to the Go Live sessions, go to Go Live, which is right under strategies, and then click on Manny Quinones and watch his session. So I hope you guys, got some. If you got some value, drop some fire for me. I need to feel this heat real quick. I want to make sure that y'all got some good information. Yes. Awesome, guys. So listen, follow me on Instagram at LaVey. If you have any questions, definitely reach out to any of the leaders in this chat. Again, I'm gonna upload this to YouTube, put it in the chat for you guys to reference later. I'm gonna drop my Instagram one more time. It's LUHVAYYY. I love y'all. Let's make this money and have a profitable week. It is NFP week, which is just basically is risky. So tap into Curry's actually doing a midnight call tonight and tomorrow night to show you guys and explain about what NFP is, how to trade NFP. So tap in, guys. I love y'all. Let's get this bag. I'm out.